Hey guys, what's up, welcome back to another video. Yeah, so today I'm gonna do is I'll be showing you how I was able to get this trade on Ger40. I'll be doing a breakdown, so probably this can be helpful for you and your trading, and you can probably follow the same step that I used to be able to make this trade, and get $2,300 off of this trade on my 100k funded account, right? So let's get into the market, right? So I already cut the chart back to towards the 18, towards the trade. So I'm just gonna take you through my thought process of how I was able to get the trade. So like I always say, I like to start on the 4 hour. So as I'm on the 4 hour, as you can see, I can clearly see that price, on the 4 hour we started to make, we had a series of lower lows and lower highs before, and then from there, with this lower high being taken out, price, you can see, made an indication to the upside, right? So with an indication to the upside, we had, that market shift or a change of character. So we had a market shift, price gave us indication, came back and corrected just at the top. It's not always the case where obviously in ICC where we always see price obviously coming back to correct into the previous highs, but you can just correct at the top and then from there, use that level of resistance that was there before as a level of support and bounce off of that level, right? So we also had another indication to the upside, to where we saw price eventually giving us that break of structure, and another indication to the upside where price ended up being bullish, came back to correct to the previous highs into this previous range of this high and high low. So you can see we had another high low, and then we saw price eventually also giving us that clean break of structure to the upside, right? So with that being said, we can clearly see, okay, we have a break of structure, so we have that indication to the upside. So we don't know how far the indications we need to go, so I'm just gonna play price in terms of what price was doing. So as you can see, price already come back to correct, right? So usually what I always say is that you can pull your Fibonacci because you're going to the upside. You can pull your Fibonacci to the upside, from the higher low to the higher high. That led to the that indication where the indication ended, right? So as you can see, we have the optimal golden trade area, the golden zone, the optimal trading area as an entry area. So as you can see, we are at the 70%, also have the 79%. What you can do is you can eventually have either from one of these two positions. You can have a long position waiting for price at these levels, obviously targeting this indication high, right? So that can be one of the things that you can do. You can either use the 70% or you can use the 79% as your entry area, right? So with the 79%, you can have a consistent 1:3 risk to reward, and with the 70% you can have a consistent 1:2 risk to reward, right? So for me, what I did is, after I saw this, what I usually did is I went to the 1 hour, right? I went to the 1 hour, and from the 1 hour I could clearly see that, okay, we can clearly see that price eventually made this demand that you see over here. We had the last bearish candlestick to go to the downside. Even we had also 1, 2, 3 candlesticks that ended up at the third one being the one that ends up disrespecting the high of the previous last down candlestick to the upside. So we can clearly see spot a demand zone from that area, and also you can clearly see that price didn't come all the way to correct into it, right? So we're gonna be marking off this area over here. We're gonna mark off this area over here, right? This area. So basically I'll call this a demand. This will be the demand. So I'm just gonna delete the Fibonacci. So we're gonna have this area. So we can clearly go down to the likes of, probably like the likes of, since we're on the 15 minute, on the 1 hour, we can go down to the 15 just to also get a clear view of how the chart is looking like. So back to our demand area, we can clearly see on the 15 minute that I'm trying to refine it, right? So I'm coming to the 15 to refine the demand zone. So from the 15 minute, I can clearly see that price eventually made the demand at this area. So we do have some fair value gap left behind, and this can be also an inducement for price to actually people to get into, you know, from this area looking for buyers. I mean, as you can see, we do have also another demand at this area. So what I did is I looked at all of this. Like, okay, we do have, you know, this demand area, and we have the inducement, we have the fair value gap also sitting there. So what I did is, okay, I was like, okay, we have this imbalance that price, you know, pointed out, and from this imbalance we were able to get an inducement, right? And from this inducement, from the inducement where we expect buyers to be coming in, you know, looking for buys from this area, we ended up seeing price eventually creating that indication on the 4-hour, right? And eventually breaking structure to the upside, right? So we see this at the extreme. We see this, you know, this level of demand that we have down there. So I wanna play price just to show you how price did react to this area. So like I said, this would be a trap. This area over here, the inducement area, will be a trap. So I would want to see price sort of, you know, coming to the downside, give us some sort of a reaction off of this, only for price to come and wipe them out and then react off of this demand over here, right? And from the demand, I will be looking for price to probably give me, you know, something from here, and I can use that to actually take price to the upside. You know what I'm saying? So with that being said, I'm just gonna play price a little bit forward. So let's see how price eventually reacts. So as you can see, we see price as is coming to the downside. We're having series of lower lows and lower highs being printed by price on the 15 minutes. Price is, you know, strongly coming to the downside that we want to see it, right? So as you can see, price is coming to the downside clearly. Price coming to the downside, price coming to the downside. As you can see, price is still building, you know, some price action reacting, giving some reaction off of the fair value gaps over there, you know. So obviously, like I said, the inducement will be a trap. As you can see, we have the inducement, early buyers are coming into the market, right? So we have early buyers jumping into the market. The stop loss just below this, you know, inducement low over here, and obviously they will be looking to take price to probably even to the upside up until probably at these highs over here, right? So let's see what price eventually does. Price taps them in, put some of them into profits as price continues to go. I think goes up until somewhere this area, and then from there price ends up taking everybody else out, right? Price ends up wiping everybody else out. So this got triggered on the 12th. So obviously the trade I took was on the following week. So obviously now we're just waiting for price to just come to our area, right? So like I said, we saw this, you know, a reaction of the inducement for early buyers coming into the market. As you can see, price went to the upside, you know, it's giving all of the good signs, and then eventually price ends up doing what? It ends up taking everybody else out, right? So price ends up taking everybody else, comes to our demand area, right? So we know that price reacted off of the inducement, trapped early buyers into the market, and then wiped them out. So now already the inducement price wiped the early buyers. So we have, remember, we had the imbalance left and also our demand area at the extreme of the 4-hour, and now that's where we want to be looking for buys. One of the things that you can do is you can eventually also take some buys from this area, stop loss either at the lows or just below the lows, and now you can eventually aim for the upside. You get what I'm saying? You can aim for the upside, which is something that most people I would recommend most people eventually do, right? So as you can see, price react off of that levels, and then from there you can see price eventually moves to the upside. You get what I'm saying? So with that being said, this is what I ended up doing, right? I ended up taking the trade, and price was pushing nicely. As you can see, I think I do have those trades, those traders that were running. So as you can see, this was on the 18th. As you can see, so I was running. Also, I took some partials. You know, I took some partials at the end. As you can see, my entry 23,716, and then my stop loss was just below the lows, and then my TP was at the high, right? 25,171, right? So what as I took my partials, I took just about 1,500 because I was probably like up $2,000, and eventually I didn't end up holding the trade all the way. So as you can see, I ended up closing the trade overall at 24,035, as you can see, and then obviously taking total profit of 2,236, right? So because for me, I ended up this is why I ended up closing my trades just around this area over here, and then there was my entry, and then probably this was my stop loss, right? My stop loss was just below this lows over here. It wasn't exactly at this, but it was probably below at this lows over here, and then I ended up just taking out because I was looking at how price might be reacting off of some of these levels over there, especially the fact that on the 1 hour, when you look at the 1 hour, when you look at the 1 hour, we had with price correcting to the downside, with price correcting the 4 hour, price ended up being bullish, higher, low, and then higher, price ended up creating a higher low, only for price to come and wipe out the range higher low, right? And obviously this would be an indication for someone on the 1 hour. So with price eventually going, then reacting off of this area over here, it was, for me, it was just too much of a a risk for me to actually hold a trade. I was like, okay, I'm good with 2%, and overall for the day, actually I ended up making 6% for the day with some of the trades. As you can see, some of the paid trades, because I had two accounts. This was on my $100,000 account, and now this was also on my 50,000 gold funded account. You get what I'm saying? So as you can see, I made 2,300 also here. I also ended up making 2,200 also at this area. So some of the trades that were in, I was in, was also Bitcoin, S&P 500, and also NSD USD, and we also started some of the gold trades that ended up taking a loss on. But as you can see, I'm very strict when it comes to how much I risk. I ended up risking 0.1%. Actually, yeah, 0.5 actually, 0.5%, right? So these are some of the trades you can see. These were the trades that I was in. This was on Bitcoin, and then also this was on S&P 500. You know what I'm saying? So I had those trades that were running, and then obviously, as you can see, these were some of the analysis. This was based off the some of the 5 minutes reacting off of the same thing, where you can clearly see here we reacted off of the demand at the extreme on the Ger40, right? So with that being said, when we go to the likes of 5 minutes, I just want to show you something, right? On the 5 minutes, you can clearly, let me delete this, you can clearly see price making lower lows, series of lower lows, lower highs, lower lows, lower highs, and then we had some sort of a consolidation, right? So with that being said, once price could have wiped off these levels over here, right? Once price wipes off these levels and then obviously wipes off the lows, and then from there price moves to the upside. You can clearly see the price after taking out these highs over here, we started to see this was more of I would say this was more of a break of structure, but eventually once price started to break these sides over here, we started to see price on the 5 minute creating a series of high highs and high lows. So to someone else, this could have been an easy trade for them to actually also eat off of, because as you can see, you can clearly see a nice clean break of structure from these levels over here also, and obviously from there you could have easily also probably had your entry from these levels, stop loss just probably below these lows over here, and get whatever you need, 1:1, 1:5, whatever the case may be. And price, like I said, reacted off of this level, so you can clearly see that price is indeed going to the upside. So as you can see, price is pushing to the upside. And how you can also take your profit is you can eventually switch on this indicator, the Asian range. So as you can see, we clearly pushed past some of these levels, as you can see. So we're pushing, and then obviously maybe could have targeted the previous day Asian high. So you can see price eventually ended up going there, and this could have been a nice solid 1:7.9, or even get a solid 1:8 risk reward. So if you're risking $100, you would have made $800 off of the trade, right? So these are some of the things that you could have looked at, and then obviously be done for the day. So for me also, I ended up just once price got to these levels over here, I ended up actually, because of this, some of this consolidation, but because of my trade was at these levels over here. I had a buy limit eventually waiting for price, at these levels, my stop loss just below there, and then obviously what price coming to this, some of these lows over here, I ended up taking my profits, and I was solid actually, right? I could have easily wanted to take price all the way, right? I could have easily wanted to take price all the way. I mean, it was a solid trade, right? But for me, in some instances, I really don't want to, I don't want the hassle of having to manage the trade all the way. I mean, the strategy is solid, trust me. It's not something that I would say, no, it's not solid, I don't trust my analysis. I do trust my analysis, right? If I take a loss, it's a loss, it's fine. We move on to the next thing, right? So as you can see, I'm just gonna play it forward for you to see that this trade actually ended up going to hit TP. So this was a solid 1:10R from this entry zone that I was sitting in, right? As you can see, price in that making a series of high highs and high lows, going to the upside, and as you can see, we ended up eventually hitting TP, our ultimate TP, which was 25,000. As you can see, the way that I was showing you from the entry, you see, my eventual TP was at 25,000. So I could have made just about 5 to 6, 7 bands off of the trade based on my risk from the entry and so forth, right? I would have made something around that, right? On both my accounts, eventually I would have made $10,000, right, off of the trade. So pretty much this is how the trade eventually went, and how I was able to get a clean 2%, 2.32% on each account of my gold funded trader, my 100k account, and also my 50k funded account on GFT. You know what I'm saying? So these are just some of the things that are going on the Hasu University. Some of the trades, I'll also be doing videos on some of the losses that I did incur. We did have actually a trade that we had a loss on Euro USD. I'll make another video on that, and also I was able to get I'll lose the trade, which eventually was on profit, by the way. Just gonna show you, where is it? Yeah, this was the trade that I took the trade on the 3rd of June. I was in profit, as you can see. I was in massive profits also. So price came to react off of my my demand zone from there. Also same thing, similar similar analysis. Everything that you see, inducement, imbalance, the demanded extreme. So as you can see, I ended up being greedy, end up wanting to hold the trade only for the following day for price to actually come to the downside. And from that trade, actually I was I was aiming for the the full TP, but my take was I just wanted to aim for 1:5 risk reward. And then this, as you can see, when price was actually here, this was actually a 1:5 for me, right? It was a 1:5 from this area, so you can see how tight my stop loss was. So 1, 2, 3, 4, 5, this was a 1:5 for me already, you know what I'm saying? So the trade was already on a 1:5, and from here to the upside, just around, I think probably just around like a 12-15 hour trade. But yeah, I was satisfied. I was satisfied. So if you want to join the Hasu University, we do have a community, the Hasu University. So as you can see, we have over 60 members on the Hasu University. There's a free channel that you will definitely join with the link down in the description. If you want to join the Hasu University eventually, the Hasu University, to join the Hasu University, just $100. We teach the entries, models, we have all of those things, so we do have all of those things that you can come to learn with us, market structure and ICC, the confluences that I add on ICC. I know everybody's used to the traditional ICC entries, indication price to correct, and eventually once price gets above, you can put your stop loss below the high low and eventually buy price to the upside. But what about instances where price come all the way to this kind of extremes? Would you be willing to buy price above here? Where would your stop loss be laying? You get what I'm saying? So those are some of the things that you get to learn, the conferences that we have on the Hasu University in terms of how to get into some of the trades, still the same application of ICC, and also understanding those levels, and the introduction of supply and demand, and how to actually understand it. So as you can see, some of our students, they've been eating quite nicely. It's not the group is not more active than it used to be, because these guys are now killing it, right? So these guys are now killing this. You can see the understanding, price action, very much. Most of them, they do understand the analysis. You can see this guy was running about 10,000 pounds on his alpha funded account, as you can see, right? So these are some of the things, and some of you, I think, we've been seeing most of it. As you can see, 7,000, 1,000. Yeah, it's been a crazy ride, man. I remember some of these guys, when we started, some of them last year, when we officially opened the House University, they didn't even know where to start, where to begin, right? So these are some of the things, that you can come and learn with us on the House University. Alright guys, thank you for watching this video, and please don't forget to like and subscribe, and for more videos like this, which will be coming in the future. And then obviously turn on your notifications also to get some of this. And then if you want to join the Hustle University, like I said, it's just $100, and then it's a lifetime subscription, and obviously you'll get to be part of the community and learn. Like I said, we do have the lessons, the ICC mastery lessons, understanding all of those things. As you can see, we have the lessons over here. You can also get on to start with the lessons that we do have. A lot of lessons that are being put there, and also get to be part of the group, right, and help you with your journey. We have one-on-one sessions, and yeah, pretty much, and I can help you. Alright guys, have a great day. Have a good one. Alright, bye.